It's a well-established fact that investments across asset classes help create a large corpus, which helps you achieve your financial goals. Now, some investors not only invest in varied asset classes, but also like to invest in assets located overseas. And they have a strong reason to do that. In this video, we explore why you too should consider investing abroad. Oh, and before that, don't forget to subscribe to our YouTube channel. So many Indian investors have taken to investing abroad. Resident individuals are allowed to remit up to $2.5 lakh per year overseas under the Liberalised Remittance Scheme or LRS. Now, this window is availed by many people to tap investment opportunities overseas. As per RBI data, outward remittance under LRS for investment in equity and debt went up to $746.6 million in 2021-22 from $195.5 million in 2014-15. For the purchase of immovable property over the same period of time, Indians remitted $112.9 million compared to $45.5 million earlier. The trend of rising remittance speaks of the willingness of resident individuals to acquire assets abroad. So what's driving this trend? Diversification, of course, is a primary reason why many Indians want to invest abroad. Every country offers unique investment opportunities arising out of economic growth, macro policies, political environment, innovations, tech developments, etc. Now, with regulatory changes permitting investing abroad, either directly or through the fund of funds or exchange-traded funds route, investors have the access to immense wealth creation opportunities beyond India. Diversification helps reduce portfolio volatility, as a booming financial market in one country could make up for the setback in another. Nurturing overseas financial goals is the second most important reason why individuals want to invest abroad. Historically, we've seen the rupee lose value against the dollar. The value typically erodes at around 3% per year over the long term. Now, HNIs keen to send their children overseas for higher education prefer to keep some money in investments abroad. Also, individuals keen to take foreign vacations tend to hold investments in foreign currencies so that they don't get hit by the depreciation in the rupee against the dollar. Ease of transacting in overseas assets and a boom in technology stocks also made many investors contemplate investing abroad. After the pandemic, many fintechs rolled out online solutions that facilitated financial investments overseas. The click of a button approach, free of paperwork, ensured that costs went down for transacting overseas, attracting many investors, especially towards financial assets such as stocks and mutual funds that let you invest in stocks, bonds, commodities, and real estate, among other asset classes. Now, as investors, we tend to chase past performance. Investments in units of ETFs tracking Nasdaq 100 have been among the best performing ones over the decade which ended in 2021. No wonder so many investors are getting attracted to investing in shares of tech companies that drove the performance of Nasdaq 100 and various products that were built around Nasdaq 100 and the tech theme. And lastly, immigration policies of some European countries that require a certain amount of investment also made some HNIs seeking citizenship or residency status in these foreign countries make investments abroad. Not just that, retail investors also got drawn into the foreign investment bandwagon. Mutual fund schemes focusing on international stocks managed assets worth 38,000 crores as of 31st August 2022. So these are the key triggers essentially that are propelling more and more Indians to invest abroad. There are a host of avenues to do so, which you can also check out for yourself on our playlist. That's all we have in this video. Thank you for watching and don't forget to like, share and subscribe.